Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. Treasuries and gold eclipsed stocks in the first quarter as Trump's tariffs sow uncertainty. How have Philippine assets performed? We dive into the data. Trade complications could unsettle Asia-Pacific, including the Philippines. But to what extent? We suss out the nuances with S&P Global's Head of Credit Research, Asia-Pacific, Eunice Tan. And redefining the travel experience through integrated airport operations. We speak with the Boites Infracapital President and CEO, Cosette Canilao. Capital will soon take over operations of airports in Misamis Oriental and Bohol. They are currently operating the Mactan-Cebu International Airport, the Philippines' second busiest gateway in the Philippines. With us now is Boites Infracapital President and CEO Cosette Canilao. So good to see you, Cosette. Welcome to the program and congratulations on your 10th year.
Thank you, Cathy, and thanks for having me again. It's been a while.
It has been a while. So what's planned for Bohol as well as Misamis Oriental? And I see that they have different timelines. Misamis Oriental starting this month and Bohol in June.
In June, that's correct. So we'll be taking over the operations of Laguindingan Airport this April, end of April, and Bohol Panglao International Airport will follow in June. So for Bohol, once we assume operations, our focus will be on elevating passenger experience and enhancing operational efficiency.
Okay, and what about for Misamis Oriental?
Well, the same thing. Our focus really is more on enhancing, as I said, enhancing efficiencies and at the same time customer centricity. And we're looking at introducing digital upgrades, improving commercial spaces, and integrating sustainable practices that align with, in this case, with Bohol's ecotourism identity. And then we also plan to work closely with local stakeholders to ensure that the airport becomes a real driver of regional tourism and economic growth.
Yeah, interesting you mentioned integration and really that multi-sectoral stakeholdership that you wish to happen for the airport operations. So how similarly or differently do you think you would be operating both these airports as we've come to know it from the Mactan-Cebu Airport experience?
Yeah, but that's a shared foundation across all our airports, by the way. Efficiency, innovation, and customer centricity. But the approach is tailored per location. For example, in Cebu, it's a major international hub, while Bohol and Laguindingan are growing regional airports with strong tourism and domestic traffic. In Bohol, we'll focus on scalable infrastructure and sustainable practices. For Laguindingan, we're prioritizing capacity enhancements and connectivity, especially since it's a key link to northern Mindanao. The operating philosophy is the same, but the application is responsive to the airport's role in the network.
Yeah, there is really a lot to learn from Cebu itself, the Cebu Mactan Airport. How are you able to better take advantage of that increasing number of tourist arrivals to begin with, and also pattern that in places like Bohol and Misamis Oriental?
Well, airports are vital economic gateways, and they generate employment and stimulate tourism. So it's the same thing. We've seen it in action at Cebu, and we're applying those learnings to both the regional airports, Bohol and Laguindingan. For instance, we focus on creating a seamless travel experience from the moment the passenger arrives at the airport. That means efficient processing, good retail and food and beverage options, and digital touch points for convenience. So at Laguindingan, we aim to support the revival and growth of tourism in northern Mindanao, while in Bohol, we're hoping to build on its already strong tourism appeal by working with the local stakeholders, most especially the LGU and airlines, to open up more routes and services.
Well, it certainly looks like it's going to take time before you turn in a profit, considering the capital outlay. When do you expect to fully realize then the profitability for both airports in Bohol and Misamis Oriental?
Yeah, we view our airports as long-term investment. Profitability typically follows once we've implemented the key improvements and matured the commercial side of the airport. Given Bohol's and Lagindingan's growing tourism, we're optimistic about achieving profitability within 5 to 7 years as we increase passenger throughput, enhance operational efficiency, and boost non-aeronautical revenues. So that in for Lagindingan, there's a strong domestic connectivity and a solid base for expansion, and that's what we're focusing on.
So are there other airports that the Aboitiz Infra Capital is keen on taking over, considering the value proposition that it sees in developing airports around the country?
Yeah, we are actually very open to expanding our airport portfolio. So with Cebu, Lagindingan, and Bohol, we're already building a strong network. But we're keeping an eye on other potential regional airports that could benefit from our operational expertise. Our interest lies in assets where we can really add value, not just through infrastructure upgrades, but also through technology, enhancing customer experience, and strategic partnerships.
So what sort of qualities are you looking for these next locations for managing and operating airports around the country?
Again, strong domestic base, key, what you call this, but similarly, similar to Bohol, tourism attractions. So those are the things that we're looking at.
And it's an enabling policy that allows you to actually search for more, given the government's openness and striking more PPP projects apart from airports. So are there other types of infrastructure assets that you're keen to build a presence in?
Yeah, we see huge potential as well in water and digital infrastructure. And we're excited about, again, the push for more PPPs by the government because it allows us to play a bigger role in addressing the infrastructure gaps. But at AIC also, we aim to be a long-term partner, not only in airport development, but also in building smarter, more resilient communities through infrastructure. So that's always been the appeal for us, the enabling environment for the private sector to participate in the infrastructure development, and also how projects are structured when PPPs or when they bid it out.
So safe to say you'd be getting into the water infrastructure maybe in places where you've already built and managed an airport?
Yeah, yes, exactly. So that's the plan. What we want to do is not only build or develop the airports, but also the supporting infrastructure around our airport assets.
All right, just as a final point, as Holy Week's approaching, what can we expect from the airport operations, especially in Mactan, Cebu, where it could be a rush of all the travelers going in and out of Visayas?
We have a very good team at Mactan Airport. Our CEO Thanos and the head of our customer experience, Surisha, they're all prepared for the rush of travelers during the Holy Week period, and we welcome it.
Right, and I'll be one of the passengers then, and I'll have a feedback real soon. Thank you so much for spending time with us on a holiday. Cosette, I appreciate it. Cosette
Thank you,
Canilao, the
Cathy.
President and CEO of Aboitiz Infra Capital. And you're watching Money Talks. Coming right up, a new poll shows analysts expect inflation to ease slightly in March. Also, how will the strategic competition between China and the U.S. affect the Philippines? We'll find out from S&P Global Ratings after the break. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The Bangko Sentral ng Pilipinas says domestic liquidity grew by 6.3% year-on-year in February, reaching 18 trillion pesos. Despite the growth, liquidity slightly dropped by 0.3% compared to January. Private sector claims rose due to strong bank lending, while government claims increased as national deposits fell. Net foreign assets grew by nearly 6% as international reserves grew higher. Also from the Bangko Sentral, the country's net external liability position grew by nearly 34% in the third quarter of 2024, reaching nearly 4 trillion pesos. The increase was driven by higher liabilities from non-financial corporations and the government, while the Bangko Sentral's growing assets helped reduce the impact. Non-financial corporations' liabilities climbed nearly 8% as foreign investments and loans rose. The government's liabilities also grew over 4% as foreign investors bought more debt securities. Households and banks strengthened their financial positions, while the Bangko Sentral's assets remained stable. Days before the inflation data comes out, analysts in the Bangko Sentral weighed in and gave their forecasts. A new poll shows analysts expect inflation to ease slightly in March as rice and fuel prices continue to drop. 18 analysts from a Business World poll estimates a 2% consumer price index. This falls within the Bangko Sentral's forecast range of 1.7 to 2.5%. If realized, this would be the lowest monthly inflation since September and below both February's 2.1% and last year's 3.7%. Analysts say this downward trend of inflation could push the Bangko Sentral to cut interest rates by 25 basis points in April. However, some warn that global uncertainties could delay any policy changes. The Philippine Statistics Authority will release the inflation data on April 4th, while the Bangko Sentral will announce its policy decision on April 10th. Asia-Pacific sectors could face a complicated credit landscape as trade tensions escalate. That is according to a March 26 report by S&P Global Ratings, rounding up credit conditions in the region in the second quarter. A day later, S&P Global Ratings came out with a separate report saying trade complications could disturb still waters in the Asia-Pacific. With us to make sense of it all, live from Singapore, the head of credit research, Asia-Pacific at S&P Global Ratings, the lead author of the twin reports, Eunice Tan. So good to see you, Eunice. Thank you so much for joining us.
Hi, Cathy. Thank you for having me.
Well, let's take on your March 26 report. It highlights the strategic competition that we're seeing between the U.S. and China, both of which are the Philippines' biggest trading partners. So what have you and your team assessed? Maybe the implications on, first, the Philippine peso, and monetary policy next, should geopolitical tensions create these supply chain uncertainty and crimp financing access?
That's a really loaded question with a lot of areas to touch on. So first and foremost, our view is Philippines is less at risk of the US tariffs. Philippines is reliant on consumption and service exports, hence less sensitive to tariff headwinds, and this provides some relief to the peso. The country also has a low import tariff and no major bilateral goods surplus with the US. At the same time, we are anticipating there could be 3 product groups that could be having targeted global tariffs. These 3 are auto, pharmaceutical, and semiconductors. And for that, Philippines does not have significant exports to the US for these 3 product groups. Now, on currencies, the key aspects to watch is, clearly the low and stable inflation and a closing output gap is helping Asia-Pacific, central banks to conduct modest easing of the monetary policy. Similarly, we expect the BSP to actually be doing 2 25 bips rate cuts this year. But at the same time, the concerns of still elevated levels of US interest rates could risk capital outflows from the region.
As you say,
we do anticipate some marginal weakening of the peso to around 58.
Right, less at risk, but still at risk. So what is a bigger risk for the Philippines? Exposed as we are to the trading partners, US and China, is it the possibility of a US recession or higher tariffs dragging China's economic growth?
Yeah, indeed. Geopolitical tensions, supply chain disruptions could risk higher demands of premium from lenders and possibly higher energy prices. For Philippines, trade with China accounts for 9% of the GDP, while trade with the US is 4%. So this means Philippines is much more sensitive to China. However, it's important to note this is much lower than surrounding economies. For instance, Malaysia trade with China is about 25% of GDP, and 17% of trade with the US.
Your March 27 report focuses now on the trade complications. You flagged a hit to demand that could erode corporate revenues, especially for banks. So how much narrowing then of the credit headroom when it comes to Philippine corporates relative to its ASEAN neighbors?
Okay. Well, the regional corporate credit conditions are likely to stay uneven across countries and sectors in 2025. As mentioned, Philippines is much more services export, so the impact will be less so compared to the others. So most rated firms in S&P's purview expects that they can weather the direct impact of tariffs, but operating performance will weaken owing to a slower regional and global growth. The huge amount of uncertainty around tariffs and slower growth in China could interrupt the trend of improving funding conditions. So this all could exacerbate lenders' willingness to provide funds, and this could, narrow ratings headroom for those who are looking to get, sort of refinancing and so forth.
Which leads us to your net rating outlook bias. It has improved, I've seen, to a negative 2%. As of this month, because of the downgrades in New Zealand's public finance issuers. But could you give us more color then on the net outlook rating, where the negative bias is largest in the region?
Sure. So supportive financing conditions and domestic consumptions are stating Asia-Pacific's credit conditions. So this reflects in the improvement, as you mentioned, to about negative 2% for our net rating outlook bias. We see the negative bias largest for chemicals, building materials, retail, transportation, cyclical, and real estate for the region. Now, we revised our outlook on the Philippines government to positive since November 2024 on the grounds of improving effective policy making in the Philippines, which has aided fiscal reforms and higher government revenues as part of the GDP. And this also helped to funnel public investments. So this same positive outlook has been applied to a few ratings in the region, for Philippines, particularly, including Development Bank of Philippines and Power Sector Assets and Liabilities Management Corp. So you would look at the net rating outlook bias for Philippines as slightly more towards the positive side.
We really appreciate you giving us a look-see into what will be S&P Global's interactive webinar tomorrow on April 2nd on the global credit conditions. Thank you so much, Eunice. Appreciate
Thank
the
you
time.
very much, Cathy.
Eunice
Thanks.
Tan of S&P Global live in Singapore. And coming up after the break, gold hitting a record as stocks fall. We dive into the data after the break. Keep it here on Money Talks on One News. Welcome back to Money Talks. I'm Cathy Yang. Two U.S. markets posted their steepest quarterly declines in more than 2 years as investors remain unnerved over President Donald Trump's economic policies. The S&P 500 dropped by over 4% this first quarter, its biggest fall since third quarter of 2022. The Nasdaq plummeted by over 10%, the steepest drop since the second quarter of 2022. Both indexes entered into a correction territory in March, falling by over 10% since their most recent peak. The Dow Jones was not immune to the unease, slipping 1.3% in the opening 3 months. As for U.S. equity markets, they have reversed losses in early trading and finished higher on Monday. The Dow up by 1%, S&P 500 up by 0.5%, and the Nasdaq ended the session down by 0.1%. The benchmark 10-year Treasury yield settled to 4.245%, and gold prices breached the 3,100 mark, notching another record high. U.S. futures are pointing to a lower opening when trading begins in Wall Street later tonight, Manila time. The Dow declines by 0.2%, S&P 500 down by nearly 0.5%, and the Nasdaq drops by about 0.6%. And two Asian markets have already entered into a correction. Take a look at Japan's Nikkei 225, tumbling by over 4% Monday to post the biggest drop in 6 months. Nikkei 225 down by 12% since its December 2024 high. And this Tuesday, the market opens on a higher note by nearly 1%. Hong Kong's Hang Seng Tech Index retreated on Monday by 2%, and the market has now dropped by 12% since its March 18 high. Other Asian markets we're watching this Tuesday, the ASX 200 up on the get-go by 0.6%, and Australia's central bank is going to be holding its policy meeting today with investors expecting to keep interest rates at 4.3%. Let's take a look at Korea. The Kospi Index there has risen 1% as we speak. So a quarter of the year's gone by, and after all the volatility and uncertainty and investors running for the exits, where has the money gone? Clearly, gold, with prices now hovering at a record. Take a look at that blue line on that chart. Just see the steady uptrend here to the 3,000 mark as Trump's tariff threats roiled risk appetites, driving investors to the safety of gold. Now, this line here represents 10-year U.S. Treasury yields. That line, that white line that you see, they too had been a better bet in the last 3 months, trouncing stocks. And as you can see, there is that inverse relationship between gold and yields. U.S. 10-year Treasuries have closed out with a 2.5% gain versus the S&P 500 falling 5%, closing its worst quarter compared to the rest of the world since 2009. So how did we do? Did we mirror the gains in Treasuries? The short answer is yes. But unlike U.S. Treasuries, the 10-year Treasury yield stayed confined to this very narrow range of 6.11 to 6.33% since reaching the peak on January 17th, just shortly before Trump's inauguration. So I asked why that was, and RCBC's chief economist Mike Ricafort came back to me and said, 3 peculiar local factors exist, and that includes the Bangko Central's triple R cuts, the benign local inflation, and the interest rate differential between the Fed funds rate and the Bangko Central's policy rate. Looking beyond gold and bonds, and despite the weak start to the year, the relative outperformance in Philippine stocks versus peers in Asia. Look at the PSEI, down over 5.3% year to date, also in the red, but compare that with the ASEAN peers, Asian peers, in fact, double-digit losses there on the Nikkei 225, Taiwan's TAIEX, and Thailand's SET index. So we're right about in the middle of the pack when it comes to losses in equities in the region. Well, the stock market is closed this Tuesday for a regular holiday, the Eid al-Fitr, marking the end of Ramadan. The PSEI closed yesterday, Monday, on a higher note by 0.5%, and the peso closed yesterday stronger at 57.21 to the dollar. And with us now for more is Mark Angeles, the first Vice President and Equity Research Division Head at First Metro Securities. So good to see you, Mark. Thank you so much for joining us and on a holiday.
Thanks for having me here.
Appreciate the time.
Yeah.
So what do you make of that? An outperformance, relative outperformance in the PSEI despite the double-digit losses that bigger markets have seen. Japan's Nikkei, 225, TAIEX, but more importantly, Thailand. The SET index lost like 17%.
Correct.
That's like a neighboring market.
Yeah, I think you got to go back to our vulnerability to the tariffs, right? So on the fundamental side, on the data standpoint, Philippines exports to the U.S. only accounts for less than 5% of our nominal GDP, whereas Thailand is around 10% of their nominal GDP. So they're pretty much exposed to the trade war. And to us, at least, the weakness of the Philippine market has been somewhat also affected by unfavorable rebalancing in the last 2 months with the MSCI and the PSEI that led to some investor confidence weakening. But nonetheless, we are of the view that the Philippines, in terms of vulnerability to the trade war, is lesser versus other countries just because we are domestically driven.
It is less, but there still is. And
Yes.
that still exists. And I
Correct.
know that you also assess that along with your partners in DBS in
Yes.
Singapore. So what will it be like if, for instance, Liberation Day doesn't come to be what it is, the Trump backs out on it and doesn't proceed? How do you think the Philippine markets will react? And what will it react to?
Well, I think the way that the Trump administration has been looking at tariffs is more like a maximalist approach. You know, they put the almost maximum tariff that they want to impose, and then they bring those countries to the table for a bilateral approach. And thus the negotiation starts, right? So we think what is said right now could be the maximum that Trump is willing to impose on certain countries in terms of tariffs. And that could only go down. And from a trading perspective, I think that should be a positive for the market, given that the tariffs could be lesser than that could be said tomorrow.
Could it be more of a positive if we take
I
into
think
account the Bangko Sentral deciding on April 10th?
I think it should be positive. I'm looking at it as a positive way just because we're less vulnerable.
Are you looking at a 25 basis point cut?
Our partner in DBS is looking at around 50 bips by the third quarter, but I wouldn't be surprised if we do see a 25 bip cut, especially as we're seeing this inflation happening right now. And also, the peso is somewhat stronger than it was a few months ago, and even with the weaker remittances. And that's something that the BSP will look at, aside from the interest rate differential, that maybe they have leeway to reduce the policy rates.
So maybe not April 10th. There is a possibility.
There is
it
a
could
possibility,
be a pause still.
but the likelihood is lower versus the latter part of this year.
So is it going to be a better scenario then in the second quarter, maybe the second half this year for stocks?
Well, I think it should be a better scenario coming into the second quarter just because we're going to the election season, right? We're seeing a lot of consumption spending already, and that will bode well in terms of consumer stocks. And also a lot of economic activity, a lot of festivities during election times. And we think GDP for the Philippines is okay versus everyone else. We always get the election bump as well. So, and the cycle, if you are familiar with, I believe some of our staff have been here and discussed about where we are in the business cycle. We're we are moving from that slowdown phase into a recovery phase.
So many to get distracted about
Yes.
locally rather than just talk
Correct.
about
So,
Trump. Well,
I think the term here is that there are a lot of positives to look forward to.
all right, I'm going to hold on to that. Thank you so much, Mark. Really
Thank you,
appreciate it.
thank you, Cathy.
Mark,
Nice to be here.
First Metro Securities joining us. And before we go, for the second time this year, Egypt has discovered a pharaoh's tomb. Archaeologists uncovered a large limestone burial chamber of an unidentified ancient Egyptian pharaoh near the city of Abydos, dating back to about 3,600 years ago. The first tomb announced this year dates back to 15th century BC, located near Luxor. The two announcements mark the first time in a century that Egypt has discovered tombs of its pharaohs. Ask pharaohs what they think about being discovered. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great holiday